Aloha and welcome to Java. Thank you for joining me again. This is for Friday. It's June 14th, 2024. Happy Friday, everybody. We're going to be missing Greg, but we've got a lot to cover. So let's go right into what's going on with the markets first. We've got the MMRI favored risk indicator did pull back significantly. Right now at 277, still in high risk territory. And we're going to dig into a little bit more of why our fear greed gauge right now heading deeper into the fear zone. So with both of these diverging, there's quite a few divergences happening between yesterday and today, and we'll talk about why. So as it heads deeper into this fear territory, things can move in a much more rapid fashion. So I just want to caution against that. So we saw some very big, as I said, divergences. One of them is investors buying growth stocks, dumping value this week. And what did that do? That dropped the Dow, and the S&P 500 and the Nasdaq both increased yesterday. So we've got increase in the tech sector as well as basically the volatility index or the fear gauge as far as the market. So looking into this a little bit more, we've got gold and oil looking positive this morning. They've both been taking a hit recently. So what does this say is basically people are gambling heavier into the tech sector because they're seeing a lot of gains in this. So mostly in conjunction with larger ones, we've seen Apple, Nvidia, and then also the meme stop, GameStop rise on these. However, there's going to be a recovery for back to the value as we would see. So the fear trades are moving up this morning. We're watching gold, silver, and oil are all increasing right now. So we've got global shares mixed and the yen from Japan weakening because the central bank is not protecting their currency as of yet. However, they've got some bond buying that is coming into play here. We've got major currency wars going on. We'll talk about that in a moment. But first, I want to talk about the 10-year yield and the relative strength of the dollar. So the relative strength of the dollar up. When the dollar is worth more, everything else gets crushed in price, so stocks will decrease, as well as the 10-year yield. Now, we had Federal Reserve speaking about this, and everyone's looking to them to cut rates, but that doesn't really matter so much now, and I'll talk about why. Basically, because rates are going to be moving on their own. So looking at our calendar, we're getting import price index. Really, these are not going to matter very much. We're getting consumer sentiment basically in a gambling level right now and very uncertain. But we're hearing from Fed presidents to always manage the markets with what it is that they say. We're getting Loretta Mester, and she is on her way out. So there's going to be a replacement for her at the Cleveland Fed, and that's basically what they're going to be speaking about. Also, Austin Goolsbee will be speaking as well. So going back to Bank of England is likely to hold their rates in their June meeting, and this is going to hurt elections for Sunak. Why is this? If they don't, basically they're adjusting their currency, and this is going to adjust their inflation outlook, stock market as well, and that's good for elections when people feel better about their spending. With this come out the case for investing in Bitcoin or gold or both. Why not both? I don't understand that. Why can't it? Peter Schiff has a great case for gold, but why not both? They're both assets, unless you only have enough for one, which would be strange. Anyway, we've got the Hong Kong spot ETF. Basically, when they went live, they are buying more Bitcoin to secure their ETFs. And we're watching a lot of this inflows to the ETFs. Now we've got not just the Hong Kong, but also the Australian Bitcoin ETF. Now these are exchange traded funds, as I was speaking about yesterday. However, they've stabilized the price of Bitcoin and stayed above the 66,000 mark. So with this little more news, we had the Bitfarms, basically a miner. They're expanding into Pennsylvania. There's a large miner that wanted to overtake them larger companies, merger and acquisition. Riot. I expect Riot to expand as well. But by going into Pennsylvania, they distribute not just the energy required, but the costs for the company moving forward. And I expect them to, down the road, basically be doing pretty well as far as miners go. But if you don't like the miners, and I understand that, then purchase Bitcoin. And you can write about this in the comments if you like, or if you have any questions. So we've got US growth exceptional. The World Bank sees America fueling the global economy in 2024. Do you believe this? The only thing that America is fueling right now is inflation. They are not a major producer and not coming out with a lot of goods. Basically, if you look at the trade balances and everything else, it's in decline. The GDP has been eclipsed by the amount of debt. So, them coming out saying this is nothing more than pure propaganda. We've got a class, we've got a whole culture now of what I'm claiming as the working poor. Basically, these are people that are employed, but they still cannot afford their daily expenses. They are living off of their credit cards and contributing to this decline with all of the debt. So, let's go farther into what I would like to speak about are the currency wars. So, we've got the yuan to replace the dollar as Russia's main foreign currency because now they're trading their oil, petroleum, and other goods directly between rubles and yuan. China is insistent on using the yuan, moving also to the EU, and I think that's what we need to be watching farther forward. So I'd also like to mention this is the first year that Iran has formally joined BRICS as a mechanism. So Brazil, Russia, India, China, South Africa. And this is also providing new trade platform as China and Iran are now cooperating. We've got Euro's reserve currency status threatened as the share of foreign reserve holdings drops. Again, we're seeing Chinese renminbi, which is another word for their currency, or the yuan, emerging as the alternative regional reserve currency. So the euro in trouble. There are reports also observing that while Russia is attempting to promote the ruble as their leading currency, Chinese yuan or renminbi is what is being used. India also using the yuan as major trade. So let's go into this a little further. We've got stocks and real estate pushing Canada household net worth to a new high. This is the second narrative that is, I don't know how to call this nicely, it's rubbish. Anyway, yes, the net worth has gone to a new high. However, this is on the inflation of values. So if you have the same house and you're not selling it to make that profit, it's not doing you any good. So while they're saying the net worth has gone up, the only thing that's serving to do is increase taxes and insurance values on people, and it's actually crushing them on the other side. So not to pick on Canada, because this is also true in the United States, they're saying that the net worth of the households is up, but their debt is larger than ever. And the debt and the cost of living is outpacing what they're making for wages. So again, working poor, and it's not really correct. So as was saying before, we've got China and Iran working together to increase the overall value of BRICS. But we've got something more concerning because behind these currency wars, we also have the physical wars. And with this, we're looking at alternate methods. We've also got wars going on in space for communications and artificial intelligence. Information is the top commodity thereafter. I'm going to say that again because I cannot stress it enough. Information is the top commodity out there, and they're looking to tokenize us. I'll talk about that more in a moment. However, back to the fiscal wars. We've got Iran aiming to continue to expand its nuclear program. So, State Department spokesman Matthew Miller spoke out and said that their nuclear program is being expanded in ways that have no credible, peaceful purpose. So, what does he mean by that? Because the US is a nuclear power as well. They don't want Iran to be a nuclear power. So there's much more behind that. But I just want to talk about, with that, what do we do with this? We had Russian ships go into Havana. Now, they followed them. Basically, what happened, it's a show of force, they're saying, as a fleet of Russian warships gathered for military exercises off of Cuba. So the USS, this is the USS Helena, a nuclear-powered fast attack submarine, pulling and shadowing these Russian warships basically to the base in Cuba. The difference is this: Cuba does not want the US there. They welcomed Russia. So that's a problem. We've got this whole issue, Cuban Missile Crisis, repeating itself. So I want to go a little bit more into what's going on as far as the economy in the United States. This story: banks navigating choppy seas tap their branch networks for cash. What exactly do they mean about this? Basically, parent companies of Atlantic Union Bank in Fulton, they sold their branches, the real estate behind them, and now they're leasing them back in order to have cash on hand. And this is a way that they're using to offset their losses from the bond sales because of the rate issues. So we've got on the retail side, basically, housing, mortgage rates falling with the cooling pace of inflation. Now, this is what I was speaking about when I said it doesn't matter what they do necessarily with the rates, because mortgages will follow with the real economy. Basically, no one's getting mortgages. They have to drop the rates in order to entice people to get mortgages, and they're also increasing the time period. So late payments now, which have been on a steady rise, are now climbing at a slow rate or declining a bit with card issuers, but there's more foreclosures on the rise again. So what are they doing about this? Trying to drop the rates and then also going to 40-year mortgages. So now you're literally leaning yourself or putting a note in, putting yourself under bond or slavery for a mortgage for 40 years. That's pretty much most of your life. So leaving buyers at risk of a retirement crisis, because they can never retire with rates at this, but it's the only way that they can get payments they can afford. So this will correct, I believe, start to correct the residential sector as foreclosures are on the rise. We've also got office buildings on the rise. So with this, we'll go into what's behind all of this. As I was saying, the most important commodity information. In the UK, peers slamming Ofcom refusal to require biometric age estimation for under 13s. So they're saying this is a highly effective age check and that all service providers should use this. But what's going on is they say it should only use it to separate children from adults, not children of different ages. This is a very dangerous thing that could be happening with all of the very nefarious things going on behind this with children. They need to protect the kids, basically. So we've got privacy advocates pushing back against Meta's data usage for AI development. Basically, Facebook found a way to track information. They're using years of posts, images, and also location data to develop their artificial intelligence technologies. They're all in a race, and they are all out for your personal data, and they will use it however they can in order to win this race. So we've got another issue with this is now MasterCard, if you tie in the payments to this using biometric checkout payment programs in Europe. And what did they say? This is very interesting. The global payments giant says it chose Poland as first European country to pilot the program because they are the most receptive to the new technologies. So basically, they're saying Poland is the weakest, which is probably true, but they're pushing all of this biometrics to tie in with the artificial intelligence payment programs. It's all coming into one, and we're being tokenized very soon here. I just want to say a quick note. Feel free to join us in the Discord anytime. Wednesdays, we have live discussions, but we've also got postings going on throughout the week. If you got something you don't want to put here in YouTube, or if YouTube is cutting your comments, I'm hearing more and more that comments are not being seen. So I do like every single comment that I do see. If I haven't liked your comment, I probably have not seen it. Whether I agree with it or not, or you're entitled to your own opinion, has nothing to do with that. I want to make sure that your comments are heard. Feel free to come over to Discord. We're there. Great bunch. So with that, I've gone on a bit and I've got to get this out prior to the markets open. But thank you all for being here. I'd like to remind you, please try to become self-sufficient, stock up, prepare for what is coming. And until I see you again, my friends, stay free.